Good afternoon, everyone. I'm Stacey Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you with our weekly wrap-up. Graham, what can you tell us that's been going on in the market this week?
Yeah, thank you, Stacey. Thank everyone for being on the call. We continue to see that rotation, a rotation away from the more defensive areas of the market that people, went in to hide from the volatility or a potential deep protracted recession from last year to the sectors that underperformed the most last year, like large cap tech, some of the growthier technology areas. So we continue to see that rotation, but still a fear in the market, Stacey, that the Fed will over tighten and push us into a recession that might be deeper than a light one, however anyone wants to define that. So even though we got pockets of sunshine here on the ones that have underperformed the most from last year, we still have some strong concern that the Fed's going to do a little bit too much too fast, maybe even too long. So that's why we saw the S&P slip about to 0.66%. The NASDAQ did gain 0.55%. The Dow was down a little bit. The Russell's, the small cap area, fell about 1%. We did see crude oil rise, though. And again, we did see that slumping area in utilities, staples, industrial, some of that area that outperformed the best last year. Economic numbers, we really are seeing some really pullback, right? So if we see the U.S. Treasury yields fell a bit, we saw the Empire State Manufacturing Index see the worst monthly output since 2020. We saw some housing starts coming down. We saw some food costs coming down, gasoline falling, and some of these economic numbers. So remember what we've been talking to our viewers about is that expect some and want some of this demand or softness in some of these economic numbers, and that might put some fire underneath the markets, the bond and stock market, that the Fed doesn't have to go as fast as quick, and possibly push us into a deep protracted recession. Again, that concern. Internationally, we did see some growth in China. They opened back up. We saw the gross domestic product up about 3%, but keep in mind, that's the slowest performance or the weakest performance over the last 50 years outside of 2020. So even though they're opened up, they're growing, it's still pretty weak overall.
Okay. Well, Graham, it seems like some of the areas that really underperformed last year appear to be overperforming some this year. Can you comment on that?
Yeah, absolutely. And I made a couple of statements to that. Yeah, and it's kind of a reversion, right? So what the market is trying to do is always play in advance. Okay, what underperformed the most? So will it be coming back? Will it outperform? What if the Fed, they said they might raise a couple more times and pause and see the effect. Well, stocks and bonds went down because the Fed was very aggressively raising rates, and it pushed those growth areas of the market down the most because of it. I think it's reasonable to expect them to rise. Now, there's still a long road here. They might pause on raising rates, but they might keep rates higher for longer, and they hinted to that before they think about lowering. So I would temper some enthusiasm because this is a marathon, not a sprint here. But it is very obvious that you've seen the stuff sold off the most really rising right now, which makes sense. You've seen the stuff that performed the best, that cautionary, more conservative side of the market really underperform. So you're right.
Okay. Well, thank you so much for that. And thank you to our viewers for joining us today. Before we let you go, I have a couple of things that I want to share with you that we have on our calendar. First of all, we have our first session for 2023 of our Retirement Planning Today classes starting tomorrow evening, and we still have a few spots available. So if you or someone you know is at or near retirement age and would like to join us for this really educational A to Z, learn everything about the retirement planning process, please give us a call and we'll be happy to slide you in one of those slots. Secondly, on Wednesday, we have our very first monthly lunch and learn for the year. And this topic is going to be talking about the investment markets and economy in this new year. So that's a topic you're not going to want to miss. And then finally, we're excited to announce that we are going to host some in-house, like in our office classroom classes, educational classes coming up. And the first one is going to be on Thursday, February 16th, and it's just after work from 6 to 7:30. And our topic is going to be investing basics. So we would encourage you, if you want to just sharpen the saw, or this is actually a great time to bring your children or grandchildren or someone who is just wanting to dip their toe into investing and doesn't know where to begin, join us, and Graham's going to enlighten us all. So thank you so much. We would love to see you there. Give us a call and we'll schedule it for you. And we hope everyone has a great week, and we'll look forward to seeing you, if not on Wednesday, next Monday at the weekly wrap up. Thank you so much for joining us. We'll see you again soon.
Take care.